Hi, Warriors. Who has conviction on anything? Give me a why. Good morning, Scott, or good afternoon. Hi, Bran. Hi, Kman. Steve. Blake's back. James, how are you? Andrew. Okay. Archibald Malit, you live in South Africa. Well, welcome to F.A.C.E. Okay, Marcus, John, I don't know what he's asking for. Hello. Yeah, it's all right. I'll be a Kuwatch. You go. Lindsay Shaw's a new name. Okay. All right. So, why don't we just start with what's happening in the dollar? Okay. So, when I see this, it's a coin toss to me. You guys could see my
Yes, we
screen,
see
okay.
you, Dale. Good morning. Good morning.
Good morning. Hi, it came in, and
Good morning, Coach.
hey, welcome back. I
Thanks,
hope you
buddy.
had a good time. You sound good. So I don't know. I'm there's lots of divergence here, but is the dollar? So here's the debate, and the dollar needs to make new lows to resolve the debate. Is that people are saying, and I could see it. So you have to be open to it. You just can't be stuck to your buys all the time. That so far we've had just 3 waves down, right? I mean, that could imply that, if we start heading up from here without making new lows first, that who knows where it could go to. I mean, we could get full-blown retests. So right here to launch new money, I have a hard time doing it. Okay, how about you? Euro pound is flat.
Yeah,
You know,
flat on the day. Still working on it. There's an interesting little zone I highlighted as well on the flow show and in our room. If you see the couple of attempts just before we hit the lows and then right after we hit the lows after the first bounce, it always stopped in this 82, 60, 75 zone, and that is seemingly going to be the gateway to go lower, or we could start to stabilize here. I've reduced my positions, and I'm in the waiting room right now.
okay.
My preference is still my slight bias is still for the sterling to outperform the euro for a while, but it's in the price. We may it is possible that we have ran the best of this move right now.
Yeah, that this is with that we could be carving out a higher low, and a
Hmm,
lot of bears are waiting for this, 82 breakdown or
hmm.
to get long lower, but we could turn here. It's kind of the same dilemma as the dollar.
Yeah, in a way it
You
is.
know,
Yeah, yeah,
yeah,
yeah. But the dollar.
it's
Well, I mean,
easier.
I'm small
The
short dollars, but through cable and Aussie dollar. I'm yeah. And for the rest, I'm just waiting for things to happen. If you look at geopolitics, if you look at trade, if you look at all these kind of things, the situation is changing nearly every day. We've got overnight and well, late last evening for you during your night. We've had an avalanche of headlines, whether it be over Ukraine or trade situations with everybody. Call it China, Russia, Europe, everything. So the situation is fluid. We just had comments also from Treasurer Bessent, and the bond market doesn't know what to do with them either. So I think we need to be either a bit careful with what we have or trade it shorter term and then wait for a decision to appear and to really it'll show itself, I think, over time. We are going into, it seems like, a couple of weeks now of intense, whether it be debates or negotiations, however we may call it, on a lot of things. And we could be we are in the waiting room now to see really what is going to come out of the hat, right?
Okay. The waiting room.
I think
Been in a
so.
been in a
Uh,
few of them.
oh yeah.
Okay, so
At
the
least the
wait.
yen is showing its true colors.
Yeah, I mean they're looking at everything else. I'm going, God, what a one-way trade,
A
except
lot
for
of
this, except
yeah,
for
a lot of
this.
positives. A lot of positives coming out for Japan, and not in the least some business lobby saying that companies will likely or they will ask for decent wages again. UAE are not fighting against higher medium to long-term Japanese rates. The potential revival of the Alaska gas and oil fields, in which Japan are also partners. They should be, at least. So there's a lot of tailwinds for the yen right now.
Yeah, isn't that funny? It's easy to say that now. There weren't a lot of tailwinds here. That wasn't the narrative. So it's interesting how, the narrative finally catches up with the market. Um, so what's your feel with gold's like a beach ball? So, day trade worked yesterday, but here we are again at new highs.
Yeah.
I'm still seeing it, still feels like it's a grinder instead of blow off. Like momentum it's struggling a little bit here.
Yeah. Everything was going. I actually bought it last night again, just because it had this beach ball look. But then
Yeah.
Blessing poured a bit of cold water on it today, saying that revaluing the gold reserves is not on the top of his mind. So that's a
Okay.
bit of yeah. Gold lost a quick $10 in the process.
Yeah,
Yeah.
but we're going to finally find out if we have any gold at Fort Knox or
Yeah. Well.
just bricks painted gold. Huh? Gold finger.
Yeah, yeah, yeah.
All right, anyway.
Yeah,
So, and
I think yeah, there's still little reasons to sell it
yeah,
gold, but I mean it's also um, the real reasons to buy it may find somewhere if people asking questions around it, is there still reasons to buy, may also be resolved in or get an answer at least in the next couple of weeks. That's how I look at it right now. Um, because I said this, I mean, gold has been for so long now a hedge against everything which is bad in the world, inflation included. And if you take away those reasons, maybe we are going to see a bigger setback. Perhaps some really want to fight to see that famous 3,000, but you know how that goes. We could go up
yeah,
to 2980, and then all of a sudden the world is a better place, and gold dumps to $300. We've seen that in
yeah,
the past.
yeah. When
So
everyone's
yeah,
looking for the same number, it either doesn't get there or blows through it.
actually, technically, there is nothing at 3K. I only have,
Uh,
well, I mean, I only have like 3,100, something like there, but it's,
I know.
yeah. I
It's
actually,
not, you're not exactly early being long. I understand staying long, but new money in gold up here, I think, is high risk.
yeah, I think
Eh,
so. I think so. Yeah, for me, it's more a case of like the continuation of what I had done since, well, months really. Um, And yeah, but I'm starting to get a bit cautious, Dale, because a lot can change over the next couple of weeks.
So gold's made successive higher highs, and silver still hasn't taken out that reversal day high.
Yeah.
It looks like it could, you know, it wouldn't confirm, but still seems to be the laggard. Um, the shares, you have to be very careful in the miners, okay? Because maybe that's why you're better off in an ETF because they're pros and they do due diligence. But we've had a big run in silver, and yet stock like this, First Majestic, just came off the lows.
Hmm.
So
I'm
I
I'm
mean,
it's crazy because I'm not a watcher really of those mining companies, but
yeah,
yeah, if you look at the price of the metal, it's clearly outperformed
yeah,
the miners, and I struggle to look for reasons really because I'm not a specialist in it. I just
yeah,
to trade the stuff and then yeah.
yeah. I mean, yeah.
But
It's
you
just
explain why miners are underperforming.
uh, dilution. Most of that's why you have to be selective, just like the market's bifurcated. There's bifurcation because I mean, this was a pretty good move and from here 33 to 42. It's like 40% in 2 months.
Mhm.
So, but if you choose the wrong ones, you're in trouble. Okay. They come out with news and yeah. Um, so that's a crapshoot, just like any other individual stock. You could be right about the market and wrong about the stock you picked. So anyway, that's GDX. Why don't we get to just something else I'm seeing here that, normally if I was more bearish the market, I'd be putting stuff on. Look at XLF. I mean, for me, if I just, covered up the title, I'd be taking a crack at it up here. Okay. And a lot of the banks look that way. There was a story about Jamie Dimon selling, I think, 1 million shares
Mm.
last week. Jamie,
Yeah,
he's
but that's
kind of,
just to pay for his holidays, huh?
yeah, well, he's kind of a bear. There's a lot of, I don't know if it's clickbait, but about him talking about, hard times. But there's JP Morgan.
Shouldn't
So
be the case.
anyway, I know why he sold here because he's been in F.A.C.E and Jamie learned about the 3 drive to a top formation.
Uh-huh.
That's his reason for selling the
Yeah,
million
what's his
shares.
little name then in our chat room? Who is it? Who is it? I want to know. Jamie, show
Yeah,
your
he's high. Jamie, raise your hand.
face.
Anyway,
Yeah.
so Blake, you have your sea legs back.
Yeah, man, I'm back. I'm back.
Uh,
And
uh,
it was really interesting, just kind of getting caught up with everything and um, being I was like away from the markets. I'm always, like
Yeah, the
most people.
markets were away as well, by the way.
Yeah,
You took
it's
the
not like I
markets with
missed a
you.
whole lot, which is great. Usually when I'm gone, something crazy happens, but it was
In this case,
nice.
it was a snooze fest.
It was, and that was a good thing. But it was interesting. I was pulling up this stock, and I want to talk a little bit about it because it's been such a darling. And I know I have it on FX right now, but I want to talk a little bit about this PLTR, Palantir. And it's interesting over the last month or so. I've been watching like the CEO and this eccentric dude. I don't even know what his name is. He's just like just completely full of himself or whatever. And you can see how the stock is just broken out after earnings. He's like, welcome to the Planetary universe. He's doing like his just like a total show about his earnings calls and blah blah blah, and his hair is all eccentric looking. And if you guys haven't seen who he is,
Sounds like you're a fan.
I'm not
Alexander
obviously,
Karp.
and so, but what's interesting is that stock is getting absolutely destroyed as of yesterday, and you can see pre-market it's down another 4%. The guy's filing. It's like he's filing and restructured his equities to how he can sell more stock over the next 6 months. Basically, he wants to cash out, and the market obviously is not. It's seeing through
Well,
all
vote
this.
of confidence.
Yeah, I
Yeah.
mean, when your stock blasts to new all-time highs, and I mean, I understand you want to sell and like you want to sell into a profitable situation. I get that, but when you're the CEO of a company, it's a different story, right?
It's
It's one thing if you're
pump and
trading.
dump.
Yeah, that's exactly what it is. And plus, they're a big government contractor, and the new Secretary of Defense Haggiseth. I don't know if I pronounced his name incorrectly. The Army veteran. Anyway, he's cutting a bunch of contracts, and these guys are all big about company contracts, government contracts. Excuse me. And then on top of it, Jim Cramer yesterday, said, don't
Booyah!
worry, it's coming back. And then that was like the death knell of the of Palantir. But you got to watch the stock. This thing gets back below 100, and it's gonna get creamed. It's just something that since it's got everybody's attention, it's not a Mag 7, but it is a stock that is just
Yeah, widely
I got.
owned. Widely
Yeah,
owned.
it's one of those golden child Wall
Yeah.
Street stocks, and the guys that I used to trade for, they've one of the partners. We were talking about this a couple months back, and he's just like, that stock is just going to get crushed at some point. But we were just having the conversation, so it's kind of been on my radar for the last few months. But now it's really getting crushed, and I look at it and just look at everything that's kind of happened over the last 24 hours. And I just, I've got to raise awareness anyway. But a couple other things like in the markets that I've recognized that I just,
Blake's on the beat, on the fraud beat out there, everyone. So
I wouldn't
we're
call it fraud.
so
It's just,
uh
I think it's a froth beat. Maybe it's the froth
oh,
beat.
okay. All
Um,
right.
Yeah. Oh, and by the way, I thought I'd show. I'll show you guys this picture. If you got most of Shy Girl. This is her. Her and I. And just we had this. We met at the Money Show. I spoke with her there. For those of you that know Tracy. Really nice meeting her in person. I had a great time with her. And we should have some good sound bites coming out of that event. It was really, really nice. Matter of fact, I was kind of telling the crew here at Forex Analytix, our team behind the scenes. Yeah, I took her and my wife out to the blackjack tables afterwards, after dinner, and they crushed it. I unfortunately there wasn't room for me at the table, so the two ladies just absolutely wiped the wiped the dealer clean, basically, over the course of a couple hours, and we had a great time. So, and Tracy doesn't, she's not much of a gambler, so it was a lot of fun. Really having her been able to play with her and my wife and whatnot. Anyway, I do want to point out the dollar index, big rejection at the 107.40 level. This is a big zone, as you guys can see. It's highlighted in green. It's been a big zone of ours for a while. Once we broke that 107.30 level, that's where the bear flag really took hold. And the retest this week is just a testament to how strong that the bearish trend is for the dollar index. So now, I know we have weekly unemployment claims and maybe some, just some very minor data today that's probably not going to move the needle much, but it's tomorrow's PMIs. Remember, the whole U.S. exceptionalism story, especially at the end of last year and the beginning of this year, it's really starting to wane. And so, in last month's Eurozone and UK PMIs, both surprised the market to the upside, where the U.S. PMIs have come in a little mediocre. And if that continues to be the case, I think the dollar index trading down at 106 is entirely possible, which puts the euro dollar, closer to 106. Now, we're edging closer to obviously March 1st, and we have to be a little careful with tariffs and what the Trump administration is going to put forth with not only tariffs, to Canada and Mexico, but also to the Eurozone. So I do think, and I did mention this during the week ahead video, if the euro gets to 106, I am shorting it because I do believe that it is the 38% retracement. It is a big level for the euro. And if we get much above 106, I don't think you want to be short anymore, but I think that's the best risk reward to be on the short side if we see that level again, which I'm assuming we are. I'm assuming that the euro is going to, push back up towards 106. And when we get up there, I do want to be on the short side because I'm not in the euros going to parity camp, but I know so much of the market is, and I think a lot of the positioning's been squared up over the course of the last couple of months. The aggressively short dollar position has been getting squared up quite a bit around these levels. So I think this is going to be, just you can call it a do or die level for the euro, somewhere around here, or the dollar index, however you want to look at it. So I think there's going to be a lot of two-way action up here, and something I think we need to be paying attention to as we make our way up there. But I think one of the big ones that we should talk a little bit about is the U.S. dollar Japanese yen. I feel a little foolish because I was short dollar yen at 153.60 last week, and I closed it up on the move below, like near 152. I think I closed at 151.90 or something like that. I had a really, really nice trade in the dollar yen. I didn't expect it to come down here so quickly, but Kman, there's some reasons why that we are, testing the big figure level from the, some comments from the BOJ, or at least some expectations. So what are your thoughts as the dollar index, or excuse me, as the dollar yen is trading down at 150 now?
Well, yeah, that's what I said at the start of the show. There's a lot of tailwinds blowing right now. And that's what I also said yesterday when it was trading up in the 151s, saying that we need to keep an eye on the developments over there on various fronts. And yeah, the tailwinds are there. Not in the least, I would say that Alaska thing, because there's Japan is still needing a lot of energy from outside. So if they could get as partners into such a project, it would really reduce the price of imports. And last but not least, and I also spoke about that, we are getting two levels on the longer term yields in Japan, which may start to attract the Japanese whales. And again, timing not overly sure, but because they may actually not do an enormous amount or so ahead of the end of the fiscal year next month. But I think we're getting to levels now on the Japanese yields where it's getting interesting for them to start to getting back into more into JGBs, and that will de facto have a strengthening effect on the yen.
Okay, so that's just another tailwind that they could be adding fuel to the fire. So, technically speaking, and this is one of the, if you guys are obviously in the Forex Analytix chat room, I'm gonna just clue you guys in and just tell you how I feel about the U.S. dollar Japanese yen. As long as we, if we stay below 151, I want to be selling dollar yen. And today, the question is, are we even going to get any type of rally right now? And this is the breakdown point now technically. And so if you make any move back up here, you got to be on the short side. I don't know if I chase it down here, it's a little oversold, but that doesn't mean that it's going to stop. If you're sitting there going, okay, well, we're at 127% extension, channel support is just below, and we're oversold, I should be buying it here. That the distance between where we currently trade and we're coming through 150 and channel support is about 90 pips. So you might be a little early. If you want to try to play counter trend, you might want to wait for this, maybe ABCD completion to complete, which is below 149. Anyway, it's something that I think you guys should be paying a little bit close attention to. So, I noticed Steve is here. Steve, you said I didn't miss anything like you know, the euro dollar I think has been pretty much stuck in the same spot over the course of the last couple of days. How do you feel about the euro as it's getting, you know, towards 105, 106 level? I mean, are you a more of a dollar bull or bear at this point, or maybe a euro bull or bear, and not being European biased, by the way?
It has been really boring the last few days in FX. There are some other markets that have been moving, but FX has been extremely boring.
We're like in purgatory.
Yeah, the euro and the pound have consolidating the recent gains above the broken channels, but what in essence forbids me from being outright bearish the dollar at the moment is the fact that the DXY itself hasn't broken down from what can be drawn as a descending wedge for the time being. So until the dollar index actually breaks down, because so far the move lower has been orderly, I'm still waiting for some kind of a resolution, but unfortunately the market doesn't want to move to give us one.
Right. Well, maybe it will be the data over the next couple of days that
Hopefully, because
help move the needle, right?
It's now several days that it's a snooze fest in FX world.
Yeah.
Yeah, the
Yeah.
10-year yield, 10-year yield, maybe that's going to be it. It's challenging that uptrend line everyone's looking at, Blake, and we take that out. You know, we could see 430.
Yeah, you know, maybe this is it. I mean, what about a neck brace that we'd need for this for the, you know, the 10-year notes here?
Yeah.
I mean, man, it's been on both sides of the market, you know, very, very whippy, and you're right. Maybe it's just more of a consolidation and getting ready for some sort of breakout in one direction or the other, and that might be it. Hey, Dale, real
USD
quick,
yen is on the move today, by the way.
Yes, we just had that conversation about the dollar yen.
Yeah, I think today this is the only thing that's actually worth talking about, USD yen, and of course the yen is taking with it the rest of the yen pairs, right?
Yeah, 100%. I do think the dollar yen looks vulnerable, and
yeah, that's exactly what I was saying again yesterday on the morning edge. It had like 3-4 days of consolidation, but it was looking really vulnerable. So I expected that if we had some surprise move, it probably would be to the downside, and today we're getting that.
Yeah, and let's see if we can take out this 127% extension. Remember, we do have weekly unemployment claims coming up in just a couple minutes. Hey, Dale, I wanted to ask you really quick. Here we got S&Ps at all-time highs, barely. I mean, but we're basically probing. And I know I made the argument before I left last week. We could still be, even on Monday, before I left on Monday. This still could be a Wyckoff pattern, even if we made a brief new high, which we did this week, yesterday. It still could be a Wyckoff distribution pattern. Do you have any thoughts about equities right here as I get ready for the data?
Yeah, Monday's low is critical to me.
Okay,
we it tested the breakout. We take out 6,100. You have a false breakout in the S&P.
All right, very good. Okay, so
let's
watch.
Blake, if you look at the S&P, we're also on
trend line.
If you open it on on Trading View, we're also on top of channels trend line resistance. If you connect, if you connect the beginning of December high,
you stole it from Kman.
Yes,
thief. What was the thief? That was Kman's trend line, not your trend line.
He has a copyright, man.
Yes,
copyright infringement from Steve.
Yeah.
I have it on my chat with a note, Kman.
Kman. All right. Hey guys, we got less than a minute. Let me just get set up really quick. And I know Kman's going to scream out the data when it comes out. There's a
initial jobless claims are expected more or less
right,
stay the
and
same.
Let me put the dollar index right here. And 15-minute chart. Grab the data flash that came off of Forex Analytix. Remember, you guys have access to that too. There's the S&P. Crap! I didn't want to do that.
Really, Fed manufacturing is expected to come in at a horrific number.
Yeah. And it's a February number, so that may be interesting.
All right, here we go. Keep
5
an eye on
seconds.
that, all that data.
Any second now.
Whoa, that's even
Oh.
worse than expected on that Philly
Yeah.
Fed. Woo!
Mhm.
Initial jobless claims, a non-event practically because it's more or less as it was last month and more or less as expected.
Dollar
But Philly
weakening.
Fed manufacturing is horrific.
Yeah, and it's worse than expected. All right, guys. Well, you can see that the U.S. exceptionalism story continues to wane. Tomorrow's PMI data out of the Eurozone and the UK, especially early in the morning, I think is going to be quite the mover if you guys are up and around. But I don't want to take any time away. We have Ben Maldonado, who's here to talk cycles with Dale, so it'll be interesting to hear what Ben has to say. As we trade at all-time highs once again in the S&P. So, guys, thanks for holding down the fort, Steve, Kman.
Our pleasure.
Yeah, really appreciate while I was out of town the last couple of days. And Dale, thank you so much, and I'll look forward to having fun with you guys tomorrow as we wrap up the week.
I haven't had enough fun today yet, man. You can't go.
Well, that's why you have Ben here.
You'll have it with Ben.
Yeah.
Oh, Ben's gonna bum us all out with the end of the world kind of stuff. Aren't you, Ben? Come on, let us know before you come on. Are you?
I think you said it, Dale. It's a coin flip right now.
All right, good. There's my buddy. All right, well, thanks, Blake and Steve and Kay. Good show. And Ben, great to have you back. Happy New Year a month and a half later.
Yeah, Happy New Year to you and the gang.
Hey, buddy. So, huge deal. We haven't talked really except by text, via text of, the red wave. And I was wondering how this fit in with your epoch cycle when this event happened. And if it validates it, accelerates it, does this have any where we could get maybe a detour from what you were thinking about prior to this election, or it reinforces it more than ever?
Yeah, I think it's a great question, and it's a perfect manifestation of this epic cycle, right? Because you have this agent for essentially tearing down
Yeah.
the existing structure and starting over and saying we need something new. This is not working. I mean, you couldn't have scripted it any better than what the epic cycle says. And for people that haven't heard, what we're going to do today is we're going to run through, because there's a big convergence of cycles right now, Dale, and I think it being aware of this helps in your decision making, helps in your evaluations of, do I take risk? Do I not take risk? What kind of risk do I take? So we're going to review those. And the key thing to think about is when you have convergence of cycles like this, that sets the stage for huge changes. And we've already seen it with Trump, not only, through the executive orders, but the stuff like Doge. I mean, the revelations there are, it's certainly creating a crisis for some people. And the whole thing with crisis is crisis creates change. So we're sort of moving downhill in this process, and it's moving really rapidly. And as I said before, when we were coming into this, the best thing to do is don't react to it. Just sit back and watch. Just sit back and watch, and then think clearly about, okay, what's the best thing for me and my family, and how do we position for the new thing that's coming, because it's coming. I mean, I don't think there's any doubt now that massive changes are happening. People could have hoped for the status quo. I think the election just basically sealed it. No status quo. Yeah, no status quo. It's done.
So I'm looking at your cycles here, and you have real estate and panic and GAN.
Mm-hmm.
And in this kind of geo atmosphere, I was wondering if there's something coming up here in 2025 in your war cycles, because I've been reading a lot about some planetary work and what zone we're on by this Indian author that was expected, where we're at in his cycles is the same as where we were at in World War II.
Yeah, I don't disagree with that. I mean, the atmosphere is ripe for conflict because the main thing about the epoch cycle is you're moving from this sort of big global, massive sort of organizing structure, like things like the UN, things like NATO, and people are saying, you know what, that
Yeah,
doesn't serve our needs
that's
anymore.
right.
We're just concerned about us. We're going to take care of us, and that's going to lead to conflict, right? Because my interest may not be my allies' interest anymore,
Right.
and we're
It's
seeing that play out.
our adversaries' interests and ours are the same.
It can happen, right? And those alliances are going to change, and things are going to move. It's not going to be this sort of
Yeah.
pick your side and stay there.
Yeah.
So let's see.
All right,
Let's get
yeah.
into these things.
I'm
So
ready.
for people that don't know, the epoch cycle is a 400-year cycle. I call it the real great reset because we're at the end of one and transitioning into the next. The loss of trust and faith is something that I've spoken about for the last 2, 3 years with you, Dale. You know, how people were just losing trust and belief in the systems and the institutions. That's done. There is no trust in that anymore. The current phase is where we actually, take the systems down and there's failure. And that's why I think, Trump is the agent for that, and Doge is a perfect byproduct of that. They're exposing how corrupt and how inefficient and how sort of you know poor stewards the current structure is for our tax dollars and for organizing society. So it's going to lead to major changes. I think people are feeling the fact that this agreement between the government and the people, we give you taxes, you give us these services, and we have this arrangement. That's over because people realize that they're not getting the services. I mean, look at
So are people going to become tax rebels now?
it might. I mean, already I think there was papers filed by some politician in California to have California leave secede the union. I mean, you're going to see all these kinds of things where people say, our interests are no longer served by being a part of this big thing. We want to do our own smaller thing.
Yeah.
So it really is every man, every country for himself now, because we're looking at a multipolar world, and just look at the headlines every day and you'll see examples of that.
So we go to every man is an island instead of no man is an island.
I think that's right. And the main thing to understand when you're thinking,
as long as I'm on an island.
all right, with good weather
buddy?
and not in the way of hurricanes.
And away from the social unrest that is slowly starting to see it already, only a month in, people around the streets already.
Yep. That's going to get worse too. So
But
I think the new epoch, to the way to think of it, right? Something's ending, something's beginning. It's not the end of the world. It's just the end of the world as we know it, and it's going to be different. So it's not going to be with large centralized institutions. It's going to be smaller, decentralized system, more focus on the individual. I mean, you're already seeing it in the sort of the change in the tenor of people's beliefs and what they can talk about and what they can support. All that's changing, and it's changing hopefully for the better, and we'll see. It's an evolutionary process. Things like Doge are going to continue to happen. And that's the markers that you're looking for. So if you're thinking, how does it affect my investments? Well, big defense contractors may not be the greatest place to be, maybe smaller ones. Things that are dependent on the government, maybe not the greatest businesses. You were talking about Palantir. They're the government contract kings, maybe not a great place to be. That you got to start thinking, what are the secondary and tertiary effects of these changes? This is one that I think is really important because it's coming, it's here. It's an approximate 20-year cycle where we have, a big move up after a 3 to 4 year decline. So it's like a 16, 17-year run after a 3 to 4 year decline. The top of the cycle happened in January, And it's 3 to 4 years on average that we're going to see this. And it doesn't have to crash like the last one, but where it's going to be softness and it's not, and there's going to be, recessions, there's going to be banking and credit stress because, it's a highly levered asset. And one of the things that you look at and say, okay, you can't just blindly follow a cycle. You have to say, is price confirming? What is price saying about the cycle? And I want to review the home builders with you and see that.
All right. Well,
This is
I know they've been ugly. Been
Yeah.
talking about them for a while. But
Yeah.
the financials have been the strength in the market, and now they're beginning. I have 3 drives to top formations everywhere in the financials now.
I think that when you were pointing out JP Morgan and the banks, I said that is really smart because, again, real estate is highly levered. Banks are going to be affected. If we have, a 10, 20% pullback, 30% pullback in housing prices, there's going to be issues for banks and with credit. I put this tweet out almost 2.5 years ago, and it pointed, the cycles pointed to January of 2025 for the high end real estate. And we're starting to see evidence that this time frame is right. So it's not something that, you do flippantly. It's a regular cycle. It's approximately 20 years.
I use an 8 ball.
The magic 8 ball. That was the best, right?
Probably happened. I forgot their answers, but they all work. So
yeah.
anyway,
they were generic enough to work for any question. But we spent hours with it, didn't we?
It's like a CNBC interview.
Right.
You should be long unless it fails, and then get out unless it comes back and rallies again.
Yep. So for housing, here's the data, right?
Yeah.
Housing units started down dramatically. Housing permits flat. I mean, this is how you transition from a market that's rising to a market that starts correcting. And so the data is starting to support that now. And then look at the home builders.
Melody thinks it's going to be the financial crisis, the housing crisis back then, which was a financial crisis. It's going to be like 2.0 on steroids.
I mean, it's possible.
Thinks it's going to be worse than 08, 09.
Obviously, it's all related to the leverage and then people's ability to service the debt. So if we wipe out a bunch of jobs because of a recession, you could absolutely see that. Here on this is the home builders and S&P home builders on a weekly basis. Those 2 white arrows were both false breaks. We made a slightly higher high there, and on the second one we made like a 1 tick higher high and then reversed hard.
Yeah.
So, price action in the home builders is telling you, okay, there's issues coming up in the housing market. And so keep watching them to see if the cycle confirms. Again,
looks like I hadn't shown one more pop would kind of put in the right shoulder.
Yeah, that could be. And then the neckline down here gets broken, and then you got trouble.
Right.
So they're rolling over. Fits with the timing of the cycle. That's another thing we add to the mix, right? So you got the epoch cycle, which is a huge 400-year cycle. This is a 20-year cycle. It's just adding to stress, right? Potential stress. Let's go to the Rebel Yell cycle.
I feel stress.
I introduced this to you, I think, in the last podcast. It's like a swing trading cycle that it's based on patterns in price and time that we discovered. The signals last 2 to 12 weeks in duration, depending, upon, what fires up. And it's pretty good at identifying turning points in the market. The next hit is next week on the 25th. So it's interesting timing that we're churning at the highs as we're getting this next hit coming. So that's something I want to.
And this is for S&Ps?
This is S&Ps and risk. These white vertical lines are hits that we've had in the past on this cycle. They're not all 100%, but I mean, some of them are like spot on, like that low, that high, this high. That was the July high in 2024. So they're real good to watch. You got to watch price action coming in and out, but it does give you a marker to say, okay, has something changed? You know, if we were going sideways into it, what's happened when we come out of it? If we were rising sharply into it, did we
Yeah.
accelerate, or do we now correct, or we go sideways? It gives you a good gauge of change in energy. Here's a couple recent ones. The December one was nice, gave us a decent move, because this here was the change in the contract, if you remember, because this is a continuous contract. So the December one gave us a nice, a nice leg down there.
Yeah, that bear rate, something I warned about.
Yep,
Because
exactly.
it was going to be thin, and everyone thought they were okay till the beginning of next year.
Yeah, everyone was looking for the Santa Claus rally, and it was the opposite.
Yeah.
So the next one's here is on the 25th next week.
Let me write it down. What day is that, Ben?
I think that's Tuesday. Yeah, Tuesday.
Oh, what a turnaround Tuesday.
Yeah. And look, so we've been doing this garbage going sideways into it, up, down, going nowhere. Hopefully maybe that changes the energy and we get a real move out of it. But we'll be watching
looks
that.
Looks like a little bit of a breakout, and to me, if we take out Monday's low,
Yeah, that's
it was
trouble.
yesterday's low.
Yeah, that's trouble.
Yeah, 6,100.
Yep.
Right.
All right, let's look at the panic cycle, because this is one that doesn't come up very often, but when it does, you got to watch it. So it doesn't guarantee there's going to be a panic. What it does is it tells you time periods where there's an increased chance of a panic happening. It's related to the business cycle and human emotions, and historical panics that have come from this cycle. There's a list of them. I mean, there's some going back where I can't even get charts for them, but 1837, 1857, 1893, World War I, Great Depression. The one that I want you to focus on is the stagflation panic, because I think that's the one we're closest to right now, is the one in 68, 69. The 87 crash caught it, and the last big recession in 2007. This was there. We're in that window now. Again, it doesn't mean we're going to crash. It doesn't mean it has to happen. It just means the odds of it happening are higher than normal.
How big of a window is it?
It's generally about 3 to 6 months. We opened up like in early to mid December. So okay. I think you can look into the spring.
Okay, so 6, and that should be it could be the big huge move to the downside, because it's a panic, right?
It could be, yeah, it could be a panic. I have no idea what the cause would be. I'm not even speculating on what it be, but it's possible. Could it be, revelations through this Doge effort and things that they're doing and how they're upsetting, the current power structures? Maybe. Could it be a pushback from the other side? Maybe. Could it be financial? Maybe. Could it be war related? Possibly.
Yeah.
I mean, there's a lot of stuff.
It's going to be because of this presentation.
To have such influence, right?
Yeah. All right, we got a lot of fun things happening here. We got peaks, we got panics.
So here's the S&P from 68 to 70. I think this is the path we're potentially on. But as you could see, it's a little different, right? We made a high after the election in 68, came down, lower high. We're not making lower highs right now. We're actually poking through and making a higher high.
Right.
So you got to be open to the fact that yes, all these cycles are here, but if we get above the highs and settle above these highs, and I'll show you the levels, it's going to go. It's going to go another 300-400 points in the S&P.
Right, 64.
And you can't be stupidly short, because all you're going to be doing is giving money away. Right. So you have to pay attention to the technicals. You have to pay attention to the levels, knowing that these things are out there is just so if we do see things and the technicals start shaping up, you're not blindsided. You know what's potentially coming.
Okay. What do you make of this action? We had a breakout at the end of last week, right? Mm-hmm. And then we had Monday off, and so far we've done nothing after a breakout.
I think like you said, and like Blake said, and we'll look at the charts, if we don't get up and get on top of these previous highs and stay there and then start moving, it's a false break, and you got to watch out, because with false breaks, with these cycles around, that could be a sharp move lower.
Okay.
Let's talk about the Gann cycles. GAN has some key numbers, 90 and 144, and their derivatives are the keys. Major markets and leading stocks in those markets are showing completions in time. And what I mean by that is they're showing 90s and 144s on weeklies and monthlies. These are not like 5-minute cycles, 60-minute cycles, even 4-hour or daily. These are big, long cycles. So there's significant markers saying that there's some big moves have ended. It doesn't tell you what comes next. It just says, hey, something ended, something new is starting. It's our job to look at the technicals and to look at, what's happening in the markets to say, all right, what is most likely to come next? And truthfully, Dale, when you were talking about coin toss and Kman was talking about, waiting in the waiting room, that's exactly where we are in a lot of these markets, in risk, in bonds, in the dollar. It's all on a bigger time frame. It's all a question right now of which way are we going to go?
Yeah.
Right? And until
Yeah.
we get the evidence, we can't commit to big, sort of long-term position trades. You got to be a scalper, you got to be a day trader. And that's what I've been doing since December, since we got that downdraft, is just kind of picking things really short term, because the long term is really it's sitting on the razor's edge which way we're going to go. And one of the things I want to encourage people to do that are interested in these times, we did a video where we went into specific stocks, Palantir being one, Amazon, Microsoft, Google, Meta, Nvidia, all these big bellwether stocks. And you see that almost all of them are hitting major long-term timing cycles where there's 90 months, 144 months, 270-month cycles, 288-month cycles, things that you got to pay attention to because they're telling you that this particular move is over, something new is coming. And we're trying to decipher what that is next. So if you're interested, spend some time, go check out that video and you'll see, because it's a 45-minute video and we could spend hours talking about that.
Okay.
Let's talk about the epoch cycle plays. For the last couple of years, we've talked about three main ways to express this cycle. They've done very, very well. Especially, they were kind of flat and dead for a while, but in the last year, we've really seen a good move in them, and they continue to be ways to play this sort of chaos and the transition to a new system, because each one of these things sort of benefits from decentralized or uncertainty, or sort of this concern about the old system versus what's coming. Let's first look at gold. Right now, the key numbers in gold are this 2667 is your support. That's the half square. You can see here, this dotted line. And right now we're pushing up towards 3150, which is a full square. As long as we are above this 2667, 3150 is the magnet. Bigger cycles, like a 144 from the low here in 2016 takes us out into, late 27, early 2028. So it's possible that could be the run, the full bull run in gold, with corrections and, pullbacks and such in the meanwhile. But it looks
Would you
good.
say that at your target above 3,000, that the gold might be vulnerable for exactly what you just said? A pretty good correction, like maybe even 2,500 or so?
It's possible, Dale, but if we get above, I mean, the way these squares work, they sort of they map and control price, but once you get out of on top of a square, so let's say
Right.
we get up and sit on top of 3150 and can't get below that, it opens up a whole new square where
Okay, I
we're
got it.
then looking at 4,000s, in the
Okay.
4,000s.
So each square is about 1,000.
Yeah, in this particular case, yeah. And the
Okay.
half square is about 600. So
Okay.
the
Great
the
call.
we gotta watch that and see, how does it act at these, these cardinal points, because that tells you, okay, where are the odds flipped once we get to the edge of the square.
Because there are a lot of people that think, and if you're right about the stock market, that, we're going to have a deflationary period before the Fed really brings out the bazookas, and that's when we have really inflation out of control.
And
Because
that
the
makes sense,
economy's
Dale.
failing.
It
Yeah.
makes sense because think about it. If things are, if there's panic and people are selling stuff, they're going to sell their gold, they're going to sell their silver to create liquidity. They're just going to scramble for liquidity.
Yeah,
I mean,
their kitchen
silver's a
sink.
silver's a
Right.
good example of one we talked about, and you
Yeah.
said, it's right here. It's kind of uncertain which way we're going to go. Right, we could
It
go
is.
down and test this 2666 area,
Yeah.
or if we get legs, get up over 37, 38 area.
Yeah. I could see both of them.
And both
Silver's
of them are
taking
still
its time,
bullish,
though.
right? They're bullish,
Yeah,
right?
you're right. Even if we got a pullback, it's bullish.
Right. And if we do
Yeah.
90-month cycle from the low in 2020, takes us out into middle to late 27, the cycle would complete a 90 there.
$200 silver.
It's possible, but first we got to get over 38, then we got to get over 49. It's like stair step it up.
I know. I just wanted 2 or 3 more clicks on the interview.
Yeah.
All right, go ahead.
Here's Bitcoin. Bitcoin's an interesting one, right? We broke out and everyone's getting frustrated, just like they were frustrated here
with gold,
right?
Yeah.
And with gold too.
Yeah.
But this, as long as we're consolidating up here, it's not bearish.
Right.
Right. I mean, we could pull all the way back to 74, 75,000, and it's still not bearish on a monthly basis. The level to watch is for the monthly is this 93,000. As long as we stay above that, we can push up to this, 111, 112 area. If we get below that, then it looks more like we're going to, head back to 74, 75.
Yeah. Buy point.
Yeah. But, this is not bearish.
Everything you're long is only vulnerable to corrections, not trend reversals.
Not on the big picture, right? Not on the big picture. Everybody has different time frames, so you got to understand that this is big picture stuff. All right, look, what are the opportunities? It's funny when I heard you guys talking, you and Kman and Blake, I said, man, this is like they were setting me up. Buy or sell risk. It's a question. Buy or sell the US dollar. It's a question.
Yeah.
Buy or sell bonds. It's still a question.
Yeah.
Now I'm definitive on buying hard assets. I'm definitive on buying the grain. So let's get into these things and then we'll go over each one. All right, here's your ES, right? ES weekly. This square is set from the COVID lows in 2020. The things to notice: we completed a huge ABCD at the high. We also completed an ABCD from the 2023 lows at the high, and we're not pushing through it yet. And the reason why is we have this half square at 6150. We need to get above it and clear it, meaning get above it, stay on top of it. If we do, 6500's next. If we don't, then we start down, right? The pressure will turn. Yeah. So this is why, yes, the cycles are ominous. They're big. They're going to come to fruition, but maybe the market has one last run left in it, right? And gets us up to 64, 6500.
By the 25th, I don't think.
No, but we'll know if we can clear, get above and clear 6150, then we go. If we can't, you got to start looking to the downside.
Let me ask you, where is that vertical line, the next one that comes in from where we are? The vertical square.
Here?
There, that one, yeah, time-wise.
It's probably April, May.
Okay.
Close to mid-year, because
there's your 6400 level by May if we're going to go.
It's possible.
Yeah.
But first we got to clear these highs.
Yeah.
And the longer it takes to do it, I mean, Dale, you know sentiment, you understand stuff. If we're going to have
I'm nervous.
I know. Think about this though. If we're going to have a melt up, how often do they let everybody get on board the train before the melt up happens?
That's what's making me nervous.
Yeah.
Yeah, because I have no puts on right now.
Me neither. I'm flat because the market's telling me to be flat. The technicals are saying be flat. There's no edge right now.
Yeah, it could be like an overnight event, and
it's possible.
You're going to have to reach for it.
Right.
So I always had something on, but I thought we were going to have the breakout. We've had it, but I'm not impressed.
Nope, not yet. It'll tell us. Here's the NQs, and the NQs are interesting.
Will you give me a call, man?
Yeah, absolutely.
All right.
When we see the whites of their eyes.
All right.
So the NQs is interesting in that we've made a lower high. It's almost like NQs are like silver, right? Silver hasn't made
Yeah.
that high. Gold has. So
Yeah.
we're interesting here. The key number monthly basis is this 21,100 level, right? If we, as
Yeah.
long as we stay above that, we can push to 24. But if we get caught below, it's more likely we go to 18. So again, it's not giving us a full bar above yet. It hasn't cleared it, right? You got to get a full bar. Like here, you can see this full bar was below. It failed there. And then look what we did. We came right down here. Then we got a
Yes.
full bar above and shot back up. So
Because the Mag 7's been weak,
yeah, so
except
we got
for
to see
Amazon. Yeah.
we got to see it clear.
Yeah. Okay.
Let's go to the grain train. Your favorites, right?
Yeah.
I think the grains bear market's over. It was 2+ years. The lows
Yes.
are in, and we're beginning to move here.
Yeah.
Again, I don't know what the event's going to be. I don't know if it's going to be a drought or insects, pests, pesticides, whatever it
There is a
is.
new disease out there.
Right. I don't
There
know.
is. No, there is. I'm
Is there?
reporting it.
Yeah.
Yeah. So it's some type of blight. I forgot the name of it, but affecting U.S. wheat crops. So
Yes.
it's a blight. I forgot. It's like a disease. It's a
Well,
plant disease.
first the pattern, then the news, right?
Yeah.
So here's the key levels.
Yeah.
Weekly basis, 536 is below. We want to make sure we stay above that. Look how much time we spent here working on
Yeah.
this level, and then boom, we're going. Now
Years.
it's 681. Now we're pushing towards.
Yeah. That's the
Then
one.
we're going to battle here. We clear there. Then we could go to 825.
That's the Joseph strategy in action.
One step at a time.
Yeah.
Here's corn. Corn's been leading the pack.
It has.
You can see we pushed up out of this low, fought here for a week or so. Now we're back to 517. Big fight here, weekly basis.
Yeah. Yeah.
Get above this, you open up 621.
Dr. Scholl's in this trade. It's got corns.
Yep. All right, beans. Beans. You could see why this 1,060 level is important. And not only is it a half square, it was a previous high. We're battling here. Once we sit on top of that, open up 1283 next. But they all look good. They're in different stages of sort of coming out of the hole. All of them look good. So find a good setup, that fits your methodology, and you can definitely trade these things long.
Yeah. Okay.
Coffee's one we had on the show the last time, so I just wanted to talk about it because it was a nice big winner, and it's kind of how it show how these squares work. The last time we were here, I mentioned coffee as one of the inflation plays to buy, and we were sitting right here at this full square, around this 280, 283 area. I said, once we clear this full square, we're going to start pushing to the higher levels. Well, here we are. We went up basically in a couple months, we went up a full square. And now the key number is this 403, which I see we're below today. So if we get stuck below this, we'd squared out, a lot like those big tech stocks I was talking about in indices. Coffee squared out on some big time frames. So this may be the high. And what it'll tell us is if we get stuck below 403 and can't get back above, that the high will be in coffee. But this is the kind of moves you get, when you see these inflationary things and you have a problem with supply.
Look how long-term that a 10-year base.
Yep. And then when they go, man. So coffee was a good one.
Yeah.
Let's go to another one we talked about before, Natty. That also looks good.
Yeah,
we were talking about it around 295. We're sitting, a little over 415 today.
Yeah.
But because we stayed above here, we broke out of this triangle, 488 is where we're pushing towards. That's where the next battle is going to come. And you could see 488's been an area where there's been a lot of activity going back. So that's
I love that your stuff prepares you for what's ahead. It prepares you for your entry and prepares you for where that entry could be targeted or run into problems, or it gets through the area. It's an add-on type of thing. So one thing about your trades and doing this geometrically is that you have time to mentally prepare yourself to execute.
Yep.
It takes me a little time. I'm a bit introverted, I don't make snap decisions
You
about.
got to find the levels, right? And then
Yeah.
when how it acts at a level dictates
Yeah.
the trade. For
Very
nat
interesting.
gas, if we do 90 months high to low like it did over here, you're
Yeah.
talking about mid 2027.
Yeah.
Let's
Okay.
quickly go through the other ones. The Dixie 107.46 is a key number on a monthly basis. I know we're below that now, but you can see the bars are crisscrossing it. We got to clear it like this, right? Come up to it, can't get above it, and then get stuck below. So that's what I'm watching monthly basis to see if we get an all clear one way or another, either above it or below it. Right now we're crisscrossing it. So it's garbage from a longer term perspective.
Yeah. And I don't know.
Yep. And bonds, very similar, right? If you look at
Yeah.
this weekly, I mean, we've basically been going sideways.
Yeah.
You know, I know there's a lot of E waivers out there. You could say 1, 2, 3. This is a 4.
Yeah.
So maybe we got a 5 coming, but you got to see, we got to see something clear. Either we got to clear this to the upside or this to the downside.
Yeah.
And then we could say, okay, we're moving. We're ready.
Where's
to
your
go.
lower next box underneath the market low come in?
About 101, 102.
Okay. 102.
So that's an area to consider for a target.
That'd be.
Let's talk about NVIDIA because they got earnings. You got a rebel yell cycle on the 25th, Dale, and you got NVIDIA earnings on the 26th. There could be some serious energy coming into the market then, right?
Yeah.
Now, NVIDIA is one we did an analysis on. This is the kind of thing you'll see on that video if you go check it out for different stocks. Key number, 140, right? That's this full square right here. If we get up above it and can stay above it on a weekly basis, we go to 162. If we can't, if we get stuck under it, you're talking 117, 118. So that's the number to watch.
We'll go to 60.
Yeah, 162 is certainly possible. And
60
that would
underneath after 160.
Yeah, that's possible too. If we get stuck under,
Yeah, it looks like wave guys called that pullback was 4. That happened on that panic of deep sea.
So maybe they have another shot up. Maybe there's one more shot up.
Right to your number.
Yep. Here's something to look at on the on timing here on a monthly. For GAN guys, they'll recognize this. So if you go from the 2019 low,
my God,
the high 144 in price, 72 in time.
Wow.
And this is monthly. This is 72 months, not 72 5-minute bars.
Yeah.
72 months. That's a real time frame. So again, does it mean the high's in? No. Does it mean you got to be aware of that? Yes. And now we watch price, and price helps us. We go down to the lower time frames, weekly, dailies, and say, okay, is price failing at important spots? Is it making lower lows and lower highs? And that gives you the clue that, okay, big turn here. Or it could just be a pause. It could be, okay, maybe the vertical stuff is over and we do this bouncing up and down crap.
Well, Ben, I want to thank you for preparing this presentation for me.
I'm glad.
Really,
I'm glad you liked it.
It gave me some stuff to really consider, and you do every time. But it's interesting you brought NVIDIA out there because I trade it. So
I mean, and so many people are aware of it, Dale, and watch it, and it's a bellwether that you got to be aware of. What's it doing? What's it likely to do? Where are we? How did we get here? I mean, that's a really important part of our process is where are we? How did we get here?
Eventually, I think NVIDIA leads a crash and will be blamed for the cause of the crash. So we'll see.
I mean, it could manifest starting next week. We'll see.
Yeah.
Or it could lead us to the top, right? And put in the blow off if they just crush it and everyone gets excited.
Yeah.
That could be the catalyst that breaks us out and takes us to these terminal numbers.
I think you said the next vertical time frame after the 25th was April.
Mm-hmm.
Right?
I'll get back to you on that, but yeah, I think it's roughly around April, May.
I've heard things about April this year by some guys that are looking for a growth scare in April. So
maybe.
Anyway, let me know, man. And don't forget, you have to call me. And everyone that hears this, either live or recorded, needs to go to Ben's YouTube channel and listen to the work of him and his partner.
Yeah. It's good stuff, man. It'll help you sort of get an idea of where things are.
Yeah, Ben's going viral. Yeah, he'll be over his cold in a few days. Hey, Ben, you ever hear this?
What's
I
that?
know you've heard the first part, that money can't buy you happiness, but for sure, happiness cannot buy you money.
There you go. I've never heard that. I like that though.
Go and try, go to the bank and say, I'll put some of my happiness up for collateral.
Yeah.
Anyway,
What do you lend me against my happiness?
how about look at the smile?
It's
It's
off the
worth $1
chart.
billion. Anyway, you're the best, bro.
I
Thank
appreciate you,
you.
Dale. You and the guys do just a terrific job. I mean, like I was saying, everything a lot of the points I wanted to make, you all, because of your experience and knowledge, were pointing them out this morning. It was really, really fun to hear that.
Yeah, I think Doug Casey said, get out of Dodge. Maybe he meant Doug, but Casey's saying, you can see the signs. Why not get out of Dodge? But anyway, I'll see you on the streets.
All right, buddy. Take care.
All right, buddy. So everyone follow Ben. It's his name on X at Ben Maldonado. Go to +3 and check out those videos so you could get a handle on the time frames that, Ben's only here every 3 months or so. So stay in touch. And that's going to be a wrap. Remember, everyone, don't just count your pips, count your blessings. See you tomorrow. Good hunting today. And see everyone tomorrow to wrap the week. And I believe we're going to be doing it with Jamie at Reuters Jamie. So Jamie will be with us to talk about the Fed and other things tomorrow. So adios, everyone. Oh, the team's meeting in 4 minutes. Sign up. Get in there. That's an order. I'm crabby. Who's going to listen to me today? my dog? My dog will listen to me today. Marcus, Lindsay, okay. Scott, see you guys.